Okay, good afternoon, traders. Coming into our debrief and the end of the day, unless you are staying for the 10 years tonight and the S&P. Quite a lot to get through, and I don't want to keep you forever. I want to try and keep this to, a sort of concise time that maybe doesn't drain people's mental capacity too much listening to me. Let's just touch firstly on the month ends for the bunds. This is a pattern that we spoke about. It's a pattern that we discuss quite a lot on our courses. We discuss it with all of our traders. It's something that it's sort of a mainstay and a staple of kind of what we do. And the market actually very, very kindly behaved very well technically today. So we had the move that we discussed down to 43s. We then had our 50%. Then we had our IB test. Then we had our IB high test before using our 50% again to start a leg upwards. Now the buy time for the majority of traders and the majority of sort of month-end professionals is around 3 o'clock. It's about 1:45 after Chicago PMI, 2:45, 3 o'clock, that we start looking for our buy. Now actually we had an amazing test back down to 85, held brilliantly, and that was at exactly 2:45. If you were a little bit hesitant, you were getting in somewhere around 3 o'clock, which was around the mid-90s. Now, we started moving up quite comfortably, quite nicely. You never really went on the side, but there was one horror candle. I don't know why. I didn't hear any news come out. It was a horror candle, and I understand if people panicked on this, or maybe not just panicked, but, suffered an awful lot of pain, because we got to 16. And then we absolutely just collapsed, almost back to really the scene of the crime, this high here at 96, 97. We just absolutely dumped there. Now, if we look at our rotation chart, this is when we did it. We just absolutely came down very, very low volume here, incredibly low volume here. Would have actually set a fair few hearts fluttering, I think. Now, obviously, in amongst all of that, you did have to contend with Mr. Carney, but just keeping things clear, keeping things separate, and keeping things easier to understand. When you're taking this month-end trade, it is the best way to try and do it is as a time-based trade. And what you're attempting to do is you are attempting to stay fully focused, fully invested in the trade until the specified time. Now that's very hard to do because obviously markets move, you could get pushed offside, you could get really, really onside. But the reality of the trade is that if you are trying to do this, you're in at about 2:45, 3 o'clock, and you stay in that trade until 4:15 when the cash market closes. That is the trade. That is what you should be doing. Even though you had this horror candle, it was not a reason to cover your trade. Now, yes, you had to run it into Mr. Carney. This was probably a bit of squaring up before Mr. Carney's speech, and that did complicate matters. I really do understand that. It would have complicated things for a lot of people, but if you can step aside and ignore all of that and just take the trade for what it is, then that trade saw you all the way up to where we suggested our target would be, and you'd have been covering somewhere around the 4:15, on this candle here, between those 18, 19s, probably down to about 10. It was still, even if you timed it at 3 until this area here, you were still taking 15 ticks out of the market. That, my friends, is free money and something that you should not be ignoring in any way, shape or form. Yes, it was a bit more complicated. Yes, there were fundamentals and interest rate comments that made things a little bit more difficult, a little bit more tricky. Yes, there was a horror candle, but, and this is the real but, that the whole of this move still did what it should do and did what it said on the tin. And if you'd have stood aside from everything else that was going on and just attempted to trade this and take the trade for what it is, you should have still had a successful month end in the bond market. Now, moving on, let's just move on to our Euro stocks. This was incredible, absolutely incredible. I spoke again about, let's put a bit of context to this. I spoke about this market being the half three buy. I mentioned that is what has happened before. I also mentioned that unfortunately, sometimes it has not quite done what it says on the tin. But of the last set of months that we have had, the half three buy has been what has been working. Now this time we actually came into this with a head and shoulders. This is a head and shoulders. We had an up move, we had our left shoulder, our head and our right shoulder. And we broke it. And we actually closed below it. However, this candle was your 3:30 candle. After that 3:30 candle, we went on to do this. Now, yes, this was an interest rate announcement as well. I'm not going to get caught up in the fundamentals of what the heck is going on, where we're talking about cutting interest rates preemptively. I have my own views on that. I'm not here to talk about that today. But this was your 3:30 candle. It just straight lined up. I have not seen a move like that for some time in the Euro stocks. Just an absolute straight line. Again, coming into the sort of the FTSE shenanigans, it did have got a bit more wangy. They sold it off a bit. But really, if you held through until the actual close of the Euro stocks, the 430, the 435, you were selling the high. I haven't seen a 40-tick move in the stocks on month end. You are normally looking for 13 to 14 ticks. That's what I would have advocated. That's what you'd be looking for. Sure, you'd have been gutted to have got out here. But these are two trades. They're systematic trades. They're trades that we're used to. They're trades that we have always done and that we understand. And they are, very, very often kind of that. I hate the term free money, but they are the bonus to your trading career. Now, looking at the FTSE, this is the 1 minute FTSE. This looked a little bit tricky. The FTSE at 25 past to half past, you are normally looking for a sell. And actually what happened is we got this sell quite early, and then the market just turned and it actually rallied into 4:30 with a very, very small reversal, a 20-tick reversal thereafter from the highs that it posted at 4:30. That actually, unfortunately, is the opposite as to what we usually see. We usually expect the market to straight line down. I certainly think that where we'd come from and the comments that were around didn't help things a great deal. But, just to say, this is the volatility that we see over month end. The FTSE is, when it works, is an incredible market to trade. It really gives you a solid bit of momentum and a bit of direction. It looks on this occasion as if it wasn't as kind and as friendly as some of the other markets were. So just to recap, our month end so far, we've still got the US, we've still got the 10 years in the S&P. Timings for the 10-year, we look 7:45 to 8 o'clock to have its rally, and we look for the S&P to sort of have its sell at around 7:30 for about 6 handles before it gets pumped up into the close up until 9 o'clock, and then your reversal thereafter. A recap, the bunds worked quite nicely if you'd have stuck with it, if you'd have stuck to the plan. The bunds worked very well. The Euro stocks probably worked too well. I guess you would be getting out and taking your 13 to 15 ticks and be ruining that decision because it really took a absolute straight line up. But that's why sometimes you use trailing stops and you cover some of it and you leave some to run because you never know where it's going to go. And this was, you know, a very, very strong, unusual move. Now, I can't leave the day, I can't do a debrief without talking about Mr. Carney and the cable and our currency situation. I'm gobsmacked. I really am that the central bank has come out and started discussing summer rate cuts. We're a week into Brexit. Yes, the currency has got hurt, but has the FTSE? I mean, look at the FTSE daily. This was Brexit. Look at us now. Really? How do you call that? How do you call this? How do you call this in need of a rate cut? I don't get it. Rates are 0.5% anyway. None of the banks are charging that. The banks are all charging well in excess of that. So actually by cutting the rate, I don't understand it. And if we get into so much trouble, and if we get into so many issues that we do need a rate cut, then to have said that we're going to be rate cutting now just dampens the whole effect of it. We know now. We're hopium. So if things really do start going to the wall, the fact that we have got ourselves in a position where the world knows that we're going to cut rates, I mean, talk about premature. I mean, I don't get it. For me, I really don't get it. However, look at what's happened. We have broken this flag. We spoke about this. What a trade. What a trade. If you were listening to the FX stream this morning, I mean, talk about nailing the call. I mean, this high from here, 135.02, we said, you know, this is where we're really, really looking for a high of the day. We're looking for this market to get here and struggle. It did. We stopped at 02 to the tick. Absolute perfect swing rebound type trade. So we have stopped there to the tick. We then backed off. You know, we've been ranging, just backing off a bit. And then Carney comes out and speaks and bang, we're gone. We were trading 135.30. Now we're cutting rates. You know, not only... Oh, the ECB have just come out. It looks like the ECB have said they're going to weigh up looser QE rules as Brexit depletes the asset pool. This is why the Bund is dumping here. This is why the Bund is dumping, guys. If they're looser QE, it means it's not a bond market play. They're talking other assets now. This is insane. This is insanity. This is... I don't get this. I mean, this is just incredible. This is every central bank almost like coordinated action. And look at the stocks go. Look at the stocks go as well. Stocks absolutely rallying. Just if I can show you on the stream, this is a sim account on TT. This is where we were. So they came out and said it, and people thought, well, maybe that's a buy for bonds. But bonds are already part of the QE. Sovereign bonds are already a part of it. What they're saying is that they're going to consider other asset purchases. That is a major sell for bonds. This is what we've done. We have come off aggressively. This is what the Eurostox has done. Pull it up on a chart. Eurostox has popped again. This is great for the banking sector. It's great for the stock sector. But this is incredible, absolutely incredible that the market is doing this. This is just unprecedented that we are panicking so much, you know, less than a week after Brexit, when actually things were reasonably stable. I mean, this is central bank lunacy. This is people now, bunds absolutely collapsing. Absolutely collapsing. This could go points, guys. I mean, this really, really could go points. You know, because this is now, this is a heads up. This is just more and more and more and more QE coming into the system. Amazing stuff. Anyway, back to our currency, which is getting smoked again. What we're seeing now, we have broken our flag. We've broken our trend line. We close below here. We're really looking at 110 as our target. It's happened over Carney. Interest rate cuts, terrible for the currency, adding pressure to the currency. And now the euro doing the same. We're taking out trend lines. We're absolutely dumping on the back of this QE story, on the back of the markets. You know, really, really now throwing more and more and more stimulus at the whole situation. So euro getting caned. Dollar is obviously going to be rallying. I've got the dollar, unfortunately, on a delay, but the dollar's going to be pumping. This is the ECB story. So we've taken out this trend line again. It didn't turn into a very good trend line, but we absolutely smoked it. And we're looking set now for dollar strength, euro, cable to continue our moves downwards. Some amazing stuff this afternoon. Central bankers, politicians making an absolute mess of things, in my opinion. But it creates some great trading opportunities. I hope you guys managed to get on some of these things. It looks pretty interesting. It looks pretty amazing. As I say, standard month-end trades were there to be done. It absolutely looked, you know, really prime, looked very, very good. But actually now the bigger opportunity back in the markets, the stimulus that is being thrown at things. Bonds are going to be under pressure for this. Eurostock's knocking on 2,900, absolutely incredible, and currencies getting hit in the cable and the euro again on the stimulus that is being thrown. I can promise you that you know, the Fed aren't going to be raising rates anytime soon. I will leave it there. Some really, really good stuff. I hope you enjoy the trading. I hope you enjoy what we're doing here. We've sort of stepped up some of our streaming and really pushing forward on that. But really interesting markets, some really interesting things coming up. Stay safe. There's lots of opportunity. If you're missing the odd bit here and there, don't beat yourself up. There's going to be opportunity aplenty of that, I'm sure. As ever, if you are staying to trade this evening, if you are in the States, please trade professionally, and I will speak to you all tomorrow morning.